Talk 1370. You're listening to Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way, all the way. I'm Justin. I'm here in studio with my sidekick, Jennifer, and executive assistant by day. Hi, Jennifer.
Hello there.
And you can call us live at 512-390-1370 or send us questions or comments to ask@fortwm.com. We've got an amazing show for you today. So we're so happy to have you with us. And, you know, whether you realize it or not, if you're a business owner or an employee of a business, your Affordable Care Act, the AKA Obamacare, is or soon will impact your life. Many of its implications are just coming to light, raising more questions than ever. We're going to have Josiah Allis, president and co-founder of Design Health, in here to help. Health insurance is an important part of your financial plan, and so is your freedom of choice. So stand by to see what you may have been missing with Obamacare and how to prosper within this new framework and what you need to know. We're going to talk about that. But Jennifer, but first, it's an important weekend.
It is. It's Memorial Day weekend. So I'm sure, as all of you know, it's a federal holiday in the United States for remembering the people who died while serving in the country's armed forces. But let's also not confuse that with Veterans Day. Memorial Day is, again, remembering the men and women who died while serving, while Veterans Day celebrates the service of all U.S. military veterans.
And we want to make sure that we recognize those folks that sacrificed their lives for us and the families that paid so much, so dearly. We wouldn't be able to host this radio show. We wouldn't be able to serve our clients in our offices. So all the freedoms that we enjoy, of course, are not free. They were paid by many people that were dedicated to protecting us and serving us. And so just wanted to take a quick moment of silence for our fallen soldiers. And, you know, talking about Memorial Day, talking about freedom, this show is all about the health, wealth, and freedom you need to live life your way, all the way. We're going to be talking about, obviously, Obamacare. We're going to be talking about things that are going to be coming up in your life, things like inflation and long-term care, the government changing potentially taxes. We're going to talk about some of the pitfalls as well. I've got a Stanford study on longevity. It's called Retirement Planning in the Age of Longevity. There's 5 pitfalls that we're going to cover today. So you're going to want to stay tuned for that. We don't want you to make the mistakes that most individuals out there are making. I'm sure you're not one of them. We're going to talk about planning for the future. And, you know, planning is in a way, is trying to make the best guess we can as to what we might see in the future based off what we've seen in the past. We want to pull those things into the present so that we can address them today. And, you know, kind of funny, I actually did in the mail receive a crystal ball this week from another advisor that I work with. And, you know, I opened it out of the box. I thought, well, finally now I'm going to be able to know what's going to happen, because I get these questions all the time from my clients. Well, what's going to happen with the market? What's going to happen with inflation? When are we going to see interest rates rising, right? I'm sure you're wondering all those things too. And as I opened the box, you know, shook the crystal ball, put it on its little pedestal there, and nothing happened. So I think it's broken. It's kind of nice, so maybe I'll keep it there. It's kind of funny. Maybe what we should do is maybe on Monday, Jennifer, we'll go in there and light some candles or something. Maybe we need to dim the lights. Maybe then our crystal ball will work. And, you know, the point is with that crystal ball is it was definitely a joke. No one knows the future. If you're trying to time the market, if you're trying to gauge really what you think taxes are going to be doing, or if you don't have a plan about that, I think it's important to make your best guess. We look at the reality as things are. We've got large deficit spending. We've got a major debt in this country. We just went through a pretty nasty recession, and there's a lot of questions on the horizon. So we want to make sure that you're as best prepared so that you can be in control and not have to rely on a crystal ball from someone else. So Jennifer, can you tell us a little bit about our guest today?
Absolutely. Josiah is licensed in life and health insurance and services, and services clients in over 25 states. One of the region's foremost experts on defined contribution health plans. In 2012, he was elected by Cigna to serve on their National Advisory Committee. He has testified before the Colorado Division of Insurance and consulted with legislators from both Colorado House and Senate on healthcare legislation. Josiah graduated from the University of Northern Colorado with a degree in business management and a certificate of entrepreneurship.
Welcome, Josiah.
Thank you for having me, and happy Memorial Day to y'all down in Austin.
Thank you very much. Happy Memorial Day to you, too. We're so grateful that you could be on today, Josiah, because we've got a lot of questions for you. We're hoping that you can give us some clarification. Tell us what you're doing up there in Colorado with your clients and the things that our listeners need to know about Obamacare, Affordable Care Act, moving into the future, because we know medical expenses and healthcare costs are just not something that deflates over time. And, time is always short, and it's an important topic. So we're going to try to hit the high spots as we talk about the impact of the Affordable Care Act, Obamacare, on three areas. Really, we're going to touch on business, the under 65 crowd, the people in pre-retirement and retirement. We're going to go fast, so stick with us. And Josiah, when we get back from this break, we got to go to break. We're going to start off with talking about businesses and the impact that the Affordable Care Act is having on businesses and will likely have moving forward, and what we can do about that. So, again, this is Justin Fort, Retirement Journey, Talk 1370. Talk 1370. You're listening to Retirement Journey with Justin Fort. You can call us live at 512-390-1370 or send us questions and comments to ask@fortwm.com. I know you're probably a little bit confused about the Affordable Care Act, Obamacare, how it's impacting you, your business, or even your employer. And today we've got Josiah Allis, who's president and co-founder of Design Health, with us. You can find him at designhealth.com. And we're just before the break, Josiah, we were just discussing some of these major elements we're going to touch on today. First off, we want to talk about businesses. Can you tell us what has the impact of Affordable Care Act had on the health insurance industry, maybe overall?
Well, it's had several effects in as it relates to businesses, individuals, and I think for companies, prior to the Affordable Care Act, a lot of small companies of 10, 15, maybe 30, 40 employees have been struggling to afford health care or provide health care to their employees. And the Affordable Care Act has really added additional mandates that small employer plans or companies that are trying to offer health insurance to their employees that they need to cover. And as a result of that, we've seen costs increase significantly over the past several years as the ACA has been implemented. And so there's a lot of companies that are seeing rate increases in Texas, where we're located here in Colorado, of 15, 20, 25% to their premiums. And those types of increases are really unsustainable. And so we're seeing that a lot of companies are in the position of, how do I provide benefits moving forward? I care about my employees. I want to take care of them. But this benefit, or what was a benefit, is becoming a burden to both the company and to the employees. And so companies are evaluating what their options look like. Do they continue offering health insurance? Do they drop health insurance altogether? Or do they offer another type of benefit that can still assist employees with purchasing health insurance, but maybe the company's not in the employer sponsor, the group insurance business as they have in the past?
It does remind me what you're talking about here, Josiah, of the defined benefits, those plans that have, historically been there to pay pension benefits to employees that worked there 20, 30 years, that just kind of fell by the wayside because they were just too expensive and really ruinous to the bottom line of a lot of these corporations. And my fear is that the Affordable Care Act is going to have some kind of an impact similar to that, similar to what you're talking about.
Yeah, I think that's an excellent analogy, Justin. Is that we liken the shift that's beginning to happen in the small employer market to what we saw in the 70s and 80s, where companies moved away from pension plans into defined contribution 401k plans. And so you're beginning to see, because of the mandates with the ACA and the changes with the Affordable Care Act, that you're beginning to see employers migrate away from offering traditional group health insurance and offering other forms of benefits, one of those being defined contribution.
So what about the employer-sponsored health insurance?
Yeah, what's happened over the last several years is that these costs on these plans have been increasing at a rate of 10 or 15%. And because of all the new mandates that the ACA requires that these plans offer, the cost has just increased significantly. And so we're beginning to see companies that are, either just dropping group insurance benefits altogether, or they're moving to a defined contribution plan where they're saying, you know what, you work here as an employee. We care about you. We want to offer a benefit, but we can't continue to offer group health insurance. So we're going to give you $200, $300, $500 a month that you can use to go out and purchase your own health insurance policy. Mm-hmm. And one of the, there are some, as controversial as the ACA has been, one of the things that has really changed is that the individual insurance market prior to 2014 was medically underwritten, which meant if you had a pre-existing condition, a medical condition, maybe an expensive medication that you took, you could actually be declined for health insurance. And as one of the changes with the ACA is making the individual insurance market guarantee issue, meaning that regardless of health condition, you can purchase a policy. And so for a lot of companies that were maybe holding on to or maintaining their group policy because they had an employee that had a pre-existing condition, or maybe even themselves as the business owner or someone in their family had a pre-existing condition, we're now seeing that because the ACA offers guarantee issue in the individual insurance market, that it's allowing companies to shift how they're offering benefits from offering at the company level to really saying here's a defined amount of money and allowing the employee to really select the coverage that best fits them and their family based on what their personal needs are without being declined coverage.
And so what you need to know about this is the fact that there's more responsibility on you now to handle your healthcare needs up at least until we're going to talk about Medicare too. We're going to talk about what happens if you're under 65, what are your considerations, your options. We're going to talk about what if you're over 65, what about Medicare. We're going to talk about those things and what you can do. But it does, as Josiah is telling us, Josiah Allis is the president and co-founder of Design Health. He's telling us that we are going to have more and more people, more than likely because of the increasing rates on these health insurance premiums for these companies. Companies' plans are going to be disappearing, and maybe even more and more as we move along in the future. So you just have to be aware of your options, and that's what we're trying to do for you here on the show. Remember, the Retirement Journey show here with me, Justin Ford, is all about the health, wealth, and freedom you need to live life your way all the way. And we want to make sure that you're empowered. And remember, you can call us at our office at 512-433-6492 if you'd like to schedule an appointment and talk about your healthcare situation, talk about your life insurance situation, your long-term care insurance situation. We can handle a lot of those questions and point you in the right direction. And Josiah, the Affordable Care Act challenges small businesses, and I know we're a small business. How's that impacting small businesses in Colorado?
Yeah, it's really not only in Colorado, but also in really across the U.S. The challenge is really specifically, with companies are costs. Costs just continue to go up, and employers are getting to the place where it's becoming not only unaffordable to the company, but also to the employees. And we just worked with a contractor here in the Denver metro area this past week. They've got 10 employees. By shifting and moving away from their group plan, which was really, from a cost standpoint, unsustainable for their company to continue to afford, they were able to allow their employees to go into the individual insurance market and purchase plans that work for them and their family, and while still contributing to those plans. and they were able to save for a company of 10 employees almost $24,000 to their bottom line financially. And so for a small company like that, that's a significant amount of dollars that's now redirected into the company. But what it also did is allow employees to pick plans that work for them and their family. What we find is when we go into a group of 10, 15, 20 employees is that everyone has different health needs, probably very similar to retirement. Everyone has different retirement needs and how they plan for retirement, the income that they plan to take. And we find that very similar in the health insurance side is where individuals really, they have different needs based on health conditions and really based on how they want to insure themselves. And so you have some individuals that want low deductibles and low copays, and you have others that would maybe rather take a route of more of a catastrophic plan and put money into maybe like a health savings account. And so we find the spectrum when we sit down and work with individuals and their healthcare needs are very personal and very specific. And this approach really allows employees and individuals to pick a plan that works best for them and their family. And the other piece of it is that they own their plan, so they get to take that plan with them if they ever leave the company. That plan is permanent and portable, and they personalized it, so it goes with them regardless of whether they continue to work for that company or not.
So Josiah, what is if you can explain to us, what is a Design Health?
Yeah, so Design Health is the name of our company, and really the purpose behind that is we help employers customize and design plans that are affordable for them, and we then also work with not only employees of companies but also just individuals to help them personalize and pick a health plan that fits their family's needs, that cover the doctors that they want to make sure that they have access to, maybe prescriptions that are very important to them that they need to treat a medical condition or a chronic illness, and pick a plan that really fits, what their needs are and how they're looking to insure themselves. A 25-year-old individual who's single, not married, and doesn't have children is probably going to pick a very different plan than a family of 4 or 5 where they have 2 or 3 small children in the family. So our needs are across the board, and we really work with individuals to design plans that work for them and their family, and companies that really are both fit their budget but also provide a benefit to their employees.
Wow, that sounds a little confusing. So okay, how does the Design Health and the defined contribution model help small businesses? Can you give us an example?
Yeah, absolutely. So the company that we were referring to here in Denver, the contractor, they had just received their renewal rate increase. It was about 15%. They had a Blue Cross Blue Shield Anthem plan here in Colorado. And Texas, a lot of your listeners or business owners may have insurance through Blue Cross Blue Shield of Texas. And they had received their annual renewal increase of about 15%. And so for one of the owners, just a single employee, he was paying almost $24,000 just for himself for health insurance. Wow. And so what they did is they said, as owners and for our employees, we're going to define a set amount of money that we're going to give each employee. And on their what they decided is that they were going to give each employee $300 a month that they could use to go out and buy their own health plan. And so what our firm did is help that company set the defined contribution plan up. And then we worked with each one of their employees to help them purchase a plan that worked for them and their family. And so some employees wanted, United Healthcare, some wanted Anthem, some wanted Cigna, but we were able to match them up with the plan that best fit what their needs were. And all the while, the company was able to reduce their costs while allowing their employees to pick plans that work for them and their family. And one of the things that's interesting is that the individual insurance market, it's kind of backwards. You would like to think that the group insurance would actually be less expensive than individual policies because you're bringing a group of individuals to the insurer. But what we find is that in most geographic areas, Texas being one of them, Colorado being one of them, is that individual plans on average are anywhere from 20 to 40% less expensive for like coverage from what you find from an employer plan. And so the incentive to move away from that employer-sponsored plan, not only from a cost standpoint, but also for the ability to allow employees to personalize their coverage is really where we find a lot of business owners moving to with a lot of these market reforms that we found with the ACA.
That's Josiah Allis, president and co-founder of Design Health. You can find his website at designhealth.com. We're talking about the paradigm shift with how employers offer health benefits, what you need to know, what you can do about it, how to avoid some of these pitfalls. And of course, it can be confusing, as Jennifer stated, but we're going to try to help simplify this a little bit for you and help you understand where you can turn for some help on this and get some guidance. We'll be right back. I'm Justin, Retirement Journey Talk 1370. Talk 1370. You're listening to Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way, all the way. I'm Justin. I'm in here in studio with my sidekick and executive assistant by day, Jennifer Carter. And you can call us live at 512-390-1370 or send us your questions and comments to ask@fortwm.com. Today we're visiting with Josiah Allis, president and co-founder of Design Health. We're talking about the paradigm shift with how employers offer health benefits, how this is likely impacting you, your business, or your employer, and how rates are increasing well beyond inflation rates. And, you know, we've got options for you. You've got decisions to make. You probably need to seek some help. This can be a complicated area. And remember, you know, on this program, we're not trying to provide recommendations or advice as to what you should actually do with respect to your health insurance or any of your financial tools or policies that you have, but rather to bring up some information, help you with a little more insight into the things that you need to be concerned about. And we're back, Josiah. We're going to talk about, if we could, under 65 market. So essentially, you know, folks that are still working, they're not quite ready to file for Medicare. Their employer either has a plan or doesn't, or maybe considering dropping the plan altogether. And, you know, why freedom of choice for individuals and families? Why is this important?
Well, thanks, Justin. And I think one of the things that is very interesting about our current healthcare system is that for a lot of individuals, their healthcare is tied to their employment or to their employer. And that really poses a challenge in a couple of different ways. The first being is if you're at retirement age, we have a lot of individuals and clients that contact us that are really unsure of what their health insurance options are pre-age 65 when they may be eligible for Medicare benefits in lieu of private insurance. And so we see a lot of individuals that contact us that feel like they almost have golden handcuffs, if you will. You know, maybe they want to retire at 55, 56, 57, and they are unsure of how to purchase or even what to budget for health care until age 65. And so for a lot of individuals, they think that they almost have to work for their health care because it's tied to them as their employer. And that's one of the challenges with the employer-sponsored model is that your health insurance is tied to your employer. And so you know, for individuals that maybe have been on that type of plan for 25 or 30 years, not knowing what their options are and what's available to them in the private insurance market to help them get to age 65 when they may be eligible for Medicare benefits. The other challenge in the employer-sponsored world is that one of the number one causes of personal bankruptcy is medical expenses. And what we find is that's because it's when you get too sick to go to work, your health insurance is tied to your employer and doesn't go with you. And there is, of course, COBRA, which allows you to extend your health insurance for a certain period of time after you leave an employer. But a lot of times what we find is that employees or individuals only understand the cost of what they're paying for the health insurance because that's maybe deducted from their payroll on a monthly basis or on a biweekly basis without realizing that true cost of what the employer is also kicking in towards that health insurance. So when they get too sick to go to work, they make a job transition and they realize that their COBRA is going to be, almost as much as their mortgage payment, if not more. Mm-hmm. We find that the average time on COBRA is less than 2 months because of the lack of affordability. And so we really believe in individuals having control of their insurance, owning their health insurance, and buying plans that work for them and their family. And we just see that every individual has different needs, but by owning your own health insurance, regardless of your employment, you own your policy. It goes with you from position to position or employer to employer. And if you do get too sick to go to work, you at least have control over your health insurance and not in this position of whether or not you can afford the COBRA that's being provided to you if your employer provides health insurance.
And Josiah, I want to illustrate or highlight a couple of points that you just made with respect to folks working longer just to basically keep the health insurance, because they know that it can be very expensive in some cases to try to get it on their own. At least this is what they believe, right? Whether they've shopped it actually or not. In some cases, that remains to be seen. But I do have an article from the Investment News dated May 12, 2015, and it's titled "Getting the Message: Social Security Claimants Are Waiting Past 62." And this report is talking about the fact that one of the reasons that is because really folks are looking to work until 65 so they can get Medicare. And so that, in a way, it's kind of helping individuals a little bit more with, having more paid into Social Security, having maybe a larger check, if you will, from Social Security when they go to retire. Because we know that in a lot of cases, folks that retire and collect at 62, their Social Security checks, it's going to be in some cases a tough road for them, especially if they have a long life in retirement. Now, you're listening to The Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom you need to live life your way all the way. Excuse me. And I'm Justin. You can call us live at 512-390-1370 or send us questions and comments to ask@fortwm.com. And we're visiting with Josiah Allis, president and co-founder of Design Health. Website is designhealth.com. We're talking about the paradigm shift with how employers offer health benefits and what you can do if you're under 65. Who might you turn to? I really like the fact, Josiah, that you're independent. Your company works with folks to find the very best company that fits their needs. The insurance policies or products specifically designed for those individuals that you guys meet with there in Colorado. And for me, I think it's paramount for everyone out there, for you listening. You really need to be working with financial professionals that don't work for a particular company, because you know what? I've never found year after year one particular company is always the best for everybody year after year. And yet often I do find, insurance agents or folks out there that just continually use the same product or the same, investment vehicle with all of their clients year after year. And, you can probably agree with me, Josiah, that's probably not the case for you guys. You shop these things and you find that what may be right for one individual is probably not going to be right for someone else.
Yeah, independence is key in all areas of financial planning, and on our where we're experts on the health insurance side, we're contracted in the markets that we offer products in with every carrier, because each year and each individual has different needs, but each year we find that Blue Cross Blue Shield may be competitive, or may have been competitive in 2014, but in 2015 Humana is competitive, or United Healthcare. And so really, when you're working with a financial professional that maintains independence, they're able to then match you up with the product that best fits your needs, rather than working directly with an insurance carrier that they only have one widget, if you will, to offer, one policy to offer you, and they don't have the ability to look at what's going to be the best option for you, the individual, or for your family, based on all the options that are available in your particular market.
I love it. And this is Josiah Allis with us today, president and co-founder of Design Health. You can find him at designhealth.com. And now, Josiah, let's talk about the over 65 or pre-retirement market, if you will. Let's talk about folks that you are introducing a new term, basically, healthcare pre-retirement age. What does that mean?
Yeah, so what we find is that individuals may want to retire, may have the assets to retire at 55 or 56 years old, maybe 60 years old, and they're not eligible for Medicare benefits yet. And for most, they become eligible at age 65 for those benefits unless they have a medical condition or reason why they may qualify before age 65. And so we find a lot of individuals are looking to ensure that gap from 55 to 65 or from 60 to 65, and really. Because they may have been on an employer plan their entire, career working for, a larger company, even for that matter, a smaller company, navigating those individual options or knowing what's available sometimes can be a complex task to navigate and find what's going to be, best for them. What we really want to stress and like to stress to clients that are pre-retirement age or pre-65 age is that you can do everything right with your financial planning. But if you don't protect your health care, then you're one illness away or one medical condition away or maybe a catastrophic accident away from potentially putting what you've worked so hard for at risk. And so we think it's very, very important for individuals that are, before going on to Medicare, making sure that they have the right private insurance in place, private health insurance in place if they're no longer working, to ensure that if something does happen, they've got the right protection in place. And that's not going to put any other assets or their retirement at risk, once they get to age 65.
So what does someone do once they turn 65, and is it important to look at a supplemental insurance in addition to just Medicare?
It is. There's a couple of options that you have when you turn age 65 if you've paid in and you qualify for Medicare benefits. Typically, it's always dependent on situation, but you have 3 months prior to age 65 to opt into to Medicare, and really, you have two options that you can go. You can go through Medicare Advantage plans, or you can go through Medicare Supplement plans. Our firm really likes Medicare Supplement plans. There's some times and reasons why an Advantage plan may be more appropriate, which is why we don't just sell supplemental plans. But the idea behind a supplemental plan is it covers a lot of the expenses that Medicare doesn't cover. And so when looking to use Medicare as your primary health insurance, there's still some out-of-pocket expenses that, with a deductible and expenses over and beyond what Medicare pays that you may be subject to. What a supplemental plan does is it fills in those gaps to where it really turns your health care into a fixed monthly cost versus paying what you owe for Medicare, maybe being deducted out of your Social Security on a monthly basis, to really having that fixed monthly cost. So there's no surprises throughout the year if you have to have a surgery or you have a medical event once you're on Medicare. So we really think that supplemental plans are important, and sitting down with, again, an independent agent to find the plan that best fits your needs is something that we really advocate for, and we think is very important for individuals after the age of 65.
Yeah. Josiah, health insurance, as you're mentioning, is an important part of someone's financial plan. It's very difficult for me to help someone understand, in some of these, what if this bad thing happens, Justin? I get these questions often. What if I need access to X amount of money? What if I get sick or I get ill? Well, understanding your health insurance position and understanding whether or not you need these supplemental plans and knowing what those supplemental plans do can actually help all of us put together a plan that works best for you and your family, so that you're not sitting in a position where you have to self-insure for some things that really you could just pay maybe a smaller premium than you think to cover some of these major catastrophic risks. Well, Josiah, we're about out of time on this topic. We're so grateful for you to come on, and you're very knowledgeable. We would love to have you come back on in the future if you'd be willing.
Absolutely. Well, thank you, Justin, and also Jennifer. I appreciate your questions, and I'd love to come back. And thanks for having me on this holiday weekend. And we wish you and your listeners a happy Memorial Day.
You too. Happy Memorial Day. Thank you very much, Josiah. That was Josiah Allis, president and co-founder of Design Health. You can find him at designhealth.com. And we are going to be talking about some of the pitfalls, really from a study done by Stanford Center on Longevity. You're going to want to stay tuned for that. We're going to give you some great insights into those things. Again, this is Justin Fort. You're listening to Retirement Journey, Talk 1370.
walking down the street one day.
This is Talk 1370. You're listening to Retirement Journey with Justin Fort. You can call us live at 512-390-1370 or send us questions and comments to ask@fortwm.com. And, this part of the show, we're going to talk about some pitfalls that you need to be aware of, and you may be aware of them to some respects. You've probably heard of them before. However, maybe not in such detail. I've got some statistics that are really helpful in understanding. Of course, we want you to be empowered so that you can make the best decisions that you can. And always we encourage you to pick up the phone, give us a call at our office. You can come in. Jennifer will bake you cookies there. We've got chocolate chip cookies in the office, some coffee and drinks, things like that. So we want you to be comfortable. And our number is 512-433-6492. You can also visit us at our website at fortwm.com. Learn a little bit more about us. We've got some neat little videos there, and also some past podcasts for this show if you'd like to hear those as well. So Stanford Center on Longevity, back in 2012, they held a retirement planning in the age of longevity conference, and there were 5 pitfalls that they really focused on. Number 1, failing to plan. Well, sounds obvious. Who's not planning? Of course, you are planning. I'm sure you are. I'm sure you've got it all figured out. But you know what? Most people don't. According to this study, fewer than 1 in 5 older Americans, 50 plus, have successfully created a retirement plan. That doesn't mean, not talking about quality here. We're just talking about quantity, right? Mm-hmm. More than half, 56% of people haven't attempted to calculate how much money they will need in retirement. That's a problem. Only 1 in 3 pre-retirees have a plan for how much money they will spend annually in retirement and where that money will come from. I think the second part of that statement is really important. Where's that money going to come from? What I do know about you is that you know how much money you've got. I said this last week. I know how much money you've got. Hopefully you know where it is, in which accounts, what companies are holding those, how it's invested. But what you don't know is how you're going to turn that money that you've got into a retirement income for yourselves, you and your spouse, so that you can go on those trips and not feel guilty about spending maybe more money than you thought you could spend. And you can do that with confidence if you have a plan. You can budget in those things, and that's what we do at Fort Wealth Management. We want to show you, and that's one of the things I think that just about everybody that comes in the office and actually goes through that process with me, and we'll do that together, one-on-one. We work on the plan together. I work for you, with you, not for some company somewhere. And my interests are your interests. Of course, we've got that fiduciary duty to you and your family. So we want you to see how things really are going to be. So we're not going to, sugarcoat things. We're not going to tell you, hey, it's all roses and everything's going to be smooth sailing. Don't worry about it. Just put your money here, here, here. Right? Right. We want to have a solid plan so that you are fully taking advantage of your resources and not feeling guilty or feeling regret along the way. So, of course, most folks out there are not planning, and that could be a problem for you because if so many Americans are going to be in trouble in retirement, that's probably going to impact the stock market. It's probably going to impact the spending and buying in this country, the GDP, things like that. That can really have an impact on you, even though you're planning. So we just want to make sure that your plans are as good as they can be. And again, this is the Retirement Journey with Justin Fort, where it's all about the health, wealth, and freedom. You need to live life your way, all the way. And that's why we're talking about this. We want you to live your life your way, all the way. What I want for you is I want what you want, and I want to show you how to get what you want better. Maybe better. And like a bloodhound, what I do is I'll look at your statements, look at your plan. Maybe you have it on Excel. Maybe you have it on a napkin. I don't know. Hopefully there's some numbers involved. It's really difficult. Again, I said, we've got a crystal ball in our office. Our crystal ball doesn't produce statements with ticker symbols and things like that for us to analyze. So it's good to, if you have information, but I'd love to sit down with you and look at those things. So number 2, pitfall from this study, underestimating expenses. Big one. Most people, this is actually from Willett in 2008, says that half of workers thought they would need 70% or less of their pre-retirement income to live comfortably in retirement. and only about 1 in 10 believe they would need 95% or more. When this is compared to the amount of income that retirees stated they currently had in retirement to support a comfortable lifestyle, the discrepancies are evident, as only about 1/3 said they lived on 70% or less. You've probably heard that number before, 70% or less. You don't need as much money because really you're just going to be staying at home and not going anywhere. That's probably not what's really going to happen, okay? Because really what we're seeing here in this study that shows that 1/3, that was the case for just 1/3. Well, while more than half stated they lived on 95% or more of this pre-retirement amount. So really, we want to make sure that you're going to have a great retirement. We should probably plan on trying to have more income than you think you need, just in case, because again, we don't know the future. Things come up. Mm-hmm. Many Americans don't understand the cost of healthcare. We were talking about that earlier in the show. 43% of middle-income Americans are paying more for healthcare and Medicare than they expected they would. That's another factor. Long-term care can be a very expensive cost, and it's hard to predict. A typical married couple age 65 can expect lifetime uninsured health care and nursing home costs of $260,000. I'm not trying to scare you. I'm just trying to inform you. I want you to know that I'm aware of these things. And when you come and visit with me, we'll sit down and we'll make sure that whatever it is that we want to be careful of, we want to make sure we're not at risk of this or that. Maybe it's market risk. Maybe it's healthcare costs, and those things inflate quickly. Maybe it is just overall inflation. What's the right inflation rate to use? We can sit down and discuss that, and we can allocate your resources accordingly to really customize your plan. So I don't come with an agenda, and neither should you, really, with respect to your plan. You should be using the very best insurance companies, tools, and products, investments out there that are available, okay? And that's what we want for you and all of our clients. Failing to consider inflation, I'm sure that's not you. I'm sure you remember Jimmy Carter. You remember that inflation isn't always the same every year. And you do know that the government has a tendency to I wouldn't say necessarily play with the numbers, but some people would say that. And, that's important to understand because really Forbes, here's another article. This is from Parain Boring, believe it or not, that's her name. She's a contributor there at Forbes, entitled, "If You Want to Know the Real Rate of Inflation, Don't Bother with the CPI." Well, why does she say that? She says the CPI is perhaps one of the most important government statistics because it affects a number of public programs and is used as a benchmark to set public policy. But its accuracy is questionable, especially when compared with other agency inflation measures. And you know what? You know what inflation is because you're spending your money on these things that are going up. And if you look back 20 years, how much was loaf of bread? How much was gas? How much was your vacations? Well, vacations are skyrocketing, as a part of a portfolio, expense. And you probably want to do some traveling. I mean, who doesn't? You've worked your 30, 40 years, and now you're just going to be told that you should sit in your house like a hermit so that you don't run out of money. Well, that's not what I want for you. I want you to spend your money with confidence, with a plan, right? Not just to hoard it into some kind of a fund that we manage for you or someone else manages for you and collects that money over the rest of your life, in fees. And then you pass on and you leave that to someone else, like your children that, guaranteed they're going to spend it if you don't. Someone's going to spend your money, and you need to have a plan that will dictate who you want to spend your money. If you want to leave it to your kids, great. How much? Let's allocate that ahead of time. Let's make sure that happens, okay? If you want to spend all of your money, we can help you with a plan. How do you do that so you don't run out? Now, number 3 pitfall, underestimating years in retirement. This is a real big one. This is longevity, okay? 2 in 3 pre-retiree men underestimate the life expectancy of the average 65-year-old male. Okay, so 2 out of 3 of us are going to get this one wrong. Of that group, 42% underestimate average life expectancy by 5 years or more. And you know what? I see this time and time again in my office. I tend to be a conservative planner. I admit it. I want to be conservative in the sense that we're planning for the worst and hoping for the best. And this sounds really weird, but planning for the worst in retirement is planning for a long life. That's strange, right? If you think about it. Mm-hmm. But that's the case. It's more expensive the longer you live. It's more of a taxation on your resources, and the inflation rate's going to get you the longer you go. So that is a risk. So we want to plan on a longer life, but we want to get it right. Men appear to underestimate longevity by less than women. So women are even worse. Women do live longer than men. My wife hates when I say that, but it's just true. There's two more pitfalls here, and I'm going to get to that and what you can do about those things, and how you can get in touch with us. We've got some upcoming seminars you're going to want to hear about. We're really going to want you to come to one of those coming up. Again, we're going to be right back. This is Justin, Retirement Journey, Talk 1370. Talk 1370. You're listening to Retirement Journey with Justin Fort. You can call us live at 512-390-1370 or send us questions and comments to ask@fortwm.com. Well, I hope you're enjoying the show. I really am. I'm enjoying this information from Stanford Center on Longevity. We were just talking about 5 pitfalls before we went to break. We went through really the first 3 here. Number 1, we were talking about failing to plan, of course. Now you know you're going to plan, right? So you're going to call us and have a sit down. And if you have a plan already, you know what? That's great. I love to see people that have plans already. I love to review plans. And you know what? Most of the time, I find there's something to that plan that needs to be corrected. Something that I need to bring to your attention that can really help you out. So failing to plan is number 1, underestimating expenses. Number 2, we want to get that right. We want to not underestimate the number of years in retirement, which is pitfall number 3, according to the Stanford study. And also, number 4, now you really don't want to retire too early. This is another question that I get all the time. When can I retire? And you know what? Sometimes you can retire earlier than you thought. Well, how do we figure that out? We got to do a plan. Again, right? So I need you to come in, visit with your professional. If you're not getting a plan, you're just getting products, mutual funds, annuities, whatever it is, feel free to come in and see me. It may be that we work with some of the companies that you actually own, and we can help you figure out what those pieces are and how they integrate into an overall plan for you. Well, retiring too early can be a problem, regardless of those retirement age expectations, and consistent with prior RCS findings. Half of current retirees surveyed say they left the workforce unexpectedly due to health problems, disability, or changes at their employer, such as downsizing or closure. Sometimes it's not a choice. You need to have a plan in place sooner than you think. The time to plan for retirement is really now. It's not 2 months before you fill the box, with all your stuff and take out of the office. You want to make sure that you have a plan ahead of time, not just products and investments. Of course, the market's been doing really well for us over the last 6-7 years. The real question there is, what are you going to do with it now? And can you sustain your retirement expenses and all the things you want to do in retirement with that? Number 5 pitfall, failing to save enough. This is a big question mark for a lot of folks. How big does your nest egg have to be? Some people say it's $1 million. Some people say it's $500,000. Well, you know what? It's independent to you. It's specific to you, your situation. You don't have to have $50,000 a year income if you don't want it. But if you want $250,000 a year income guaranteed for the rest of your life, basically, that you and your spouse can spend, you probably need to have some savings or have some really amazing pensions. When asked what they thought about their financial condition for the future, the only age group where a plurality felt that they had saved enough was the group born before 1941. So I know you feel like you haven't saved enough, but you know what? In some cases, maybe you have. And that's, again, where you need to have an overall plan. So let's not make these mistakes. Let's avoid these pitfalls, because this retirement thing is just too difficult to do for making mistakes. And I will tell you real quick, I had a lady in my office last week where we did some evaluation for her. She had some mutual funds and some other investments through an individual that we're actually looking to reposition for her in a much better situation for her. Specific to her needs. And she was told by that individual, that other professional, that, there's likely going to be all these expenses, involved with you leaving us. Well, do you think that he explained that? Hopefully he did explain that to her beforehand, but I don't believe so, because she wasn't really aware of that. And so we don't want any surprises like that. Let's make sure that you know what you own. Let's take a look at it. Let's make sure that you're not going to have any hidden costs. So when you try to exit that door, just as you step into the retirement world. So Jennifer, can you tell us how we can get a hold of our seminar?
Yes. Our next seminar actually is going to be the end of June the 23rd and 25th at Steiner Ranch. You can register by calling 1-800-769-1614. Again, 1-800-769-1614. Or you can go to our events tab at our website, fortwm.com. Go again to the events tab and you can see the events and register there.
We want to thank again Josiah Allis, President and co-founder of Design Health, being on here today to talk about Obamacare, Affordable Care Act. Next week, you're going to want to tune in 12:30 to 1:30 again here on 1370. You're going to hear about whether or not your spouse or your children tease you about how being old causes them. They might take care of you in your old age. All jokes aside, who will take care of you in your old age? Who will take care of your spouse? Will there be enough money? Who do you trust to make decisions for you if you can't? The show then is a reality show about the consequences of avoiding a discussion about long-term care decisions. Next week, Harley Gordon, author of Collateral Damage, will be talking about the serious benefits of having this life-changing discussion with your spouse and children. Thanks again to our guests, our sponsors, Matt Alvarez for doing our board operations there. And thank you for sharing this information about this show with your friends and family and liking us there on Facebook, Retirement Journey. Again, this is Justin Fort. You're listening to Retirement Journey, Talk 1370.